Okay, well, we'll come back to you guys for more stock ideas. But for now, let's move on. SEBI has floated a consultation paper for feedback on allowing the entry of mutual funds and portfolio management services into the 14-year-old commodity derivatives market. Mrugank, Paranjape, the MD and CEO of MCX, joins us now to chat about that. Mrugank, it's been a good 2017. In fact, options and alternative investment funds were introduced, and SEBI is now getting ready for the increased presence of institutional investors as well. Tell us, what exactly should investors expect from 2018?
I would absolutely agree. This is clearly a great step in the right direction. Ever since the commodities markets came under the fold of SEBI, SEBI has charted out a sort of 3-year roadmap which included expansion of the products, it included expansion of the participants, it included expansion of distribution, and SEBI has really been going about all of these in a very methodical manner. We saw a white paper on AIFs which were allowed later on, and this therefore is an extremely welcome step. At the same time, we should also remember that the Indian investing public at large has also really been investing into the equity markets using the mutual funds as a route, and the SIPs have really become a big part of the investments today. So if we all want to take the commodities market to the next level, we have to make sure that we actually embrace these new instruments, make sure that mutual funds and PMS providers can use commodity markets effectively so that we can get real depth and real retail participation going in the commodities market.
Good morning, Mrugank. How prepared is the exchange for higher number of new participants?
We've seen a very consistent trend with the way SEBI has been introducing some of these measures in the market. Typically, there is a very wide consultation which happens and almost all stakeholders are met before even such a white paper is sort of released to the market. So I think that's the process that SEBI has done when we had the launch of options. That's the process which happened for AIFs. That's the process which has happened now. Now, I think from here onward, it's a very set timeline. I guess there's a couple of weeks which SEBI normally gives for actually going through all the feedback that they get. And then the last 2 times, it made it to the SEBI board agenda at the next available meeting. So I would think that in the last quarter of the financial year, this will definitely get approved and become a reality in terms of SEBI allowing mutual funds. Of course, like we saw in the case of options and AIFs, etc., the next step will then be for the manufacturers, the mutual funds, the PMS providers, their custodians, the exchanges to really work towards getting the products ready. So a mutual fund entering the market is probably a Q1 FY 18-19 reality.
So what is your estimates in terms of volume and growth?
There are various aspects in which we have to see whether we are ready and then assess what sort of value or volume impact will happen. In terms of readiness, I think the entire robustness of clearing, settlement, risk management systems, absolutely there. In terms of volumes, if they were to go up in terms of trading volumes, absolutely there. I think at some point of time, some mutual funds might want to have a clearing corporation in place. We are very happy that we should be able to match that timeline. We are very confident that we will be able to have our clearing corporation go live in time for the launch of mutual funds or PMS providers. I think that would be sort of the infrastructural requirement that we're looking at. In terms of a impact in terms of volumes, etc., and I think this is one place where I know, and being sort of an interested party myself, as much as I would love to see the volumes rise immediately on day one, we should not forget the time it has taken all of us, the amount of sweat that people have really done in terms of getting the retail and equity participations up. So it's been like a 15-year journey for us, for options to reach where they have reached, for SIPs to reach where they have reached. So I think in that sense, while it will be a great beginning, to really see the impact, it will probably take a couple of quarters before we really start seeing mutual funds and PMS providers come in.
Okay, and finally, where will the future growth come from?
So I think we had a extremely enthusiastic response to the launch of the product, and what was really very heartening to see was during the entire first contract that we had, the open interest was building up right till the end. So this was a very, very reassuring fact for us that people were increasing their participation, open interest kept going up. The third thing which we were really happy about was that the whole sort of closure of the contract, devolvement, as we said, the fact that we would have 2 or 3 new features coming in which the market had not seen. So a pre-expiry margin being levied, people actually taking their devolvement and determining whether they want to exercise, not exercise, and then actually devolvement happening into the futures. We had an absolutely seamless and smooth sort of maturity of the first options contract. So it's been a really great first contract for us in terms of the way the whole process, the whole risk management has worked. In terms of participation, we are at a good number. Definitely we would like to be at a much larger number, but I think again, like I said, we need to keep that in mind, looking at how all the other products in India have done in the past as well. So if we calibrate our expectations according to that, I think we are doing very well currently with the way gold options are. And we had a recent discussion along with our members of the board, and again that's something which we will continue to focus on to make sure that we can increase the overall turnover in the options contract.
Okay, Mr. Paranjape, all the best for that. Thanks so much for joining us. We'll take a short break, but plenty of stocks to discuss this morning. Sanjeev Bhasin of IF